steady hand and to lean into some more strategic business decisions that are weighing growth and profitability. It has truly been a really interesting last 4 years, and I think there's a lot to learn from the group that's with me today across their experiences as they have traversed the permacrisis. So maybe as a quick intro to everyone on the call, we have Zhang with us from ClickUp. ClickUp is a productivity tool and collaboration tool that's based on the West Coast in the US, where Dan is based. I'll admit, as a venture investor, that I passed on an early round in ClickUp, which has made me sad ever since, because the company has really taken off and is really a fantastic tool that millions of users use today. We also have Amel with us, head of finance at Uber. She's based in Europe with me, and I could say that Uber is a portfolio company of IVPs, so we didn't miss that one, thankfully. But obviously, Uber is well known to everyone on the call, I'm sure, and just the finance leadership and the operating cadences that go on in running that business. I'm sure we have a lot to learn from Amel. And then lastly, we have Vulnavia, who's joining us from South Africa, where she's the CFO at the Student Hub. And so, as I said, I think a really interesting group here today who's had to weather the storm of the permacrisis. But we're going to kick it off pretty quickly, actually, and not spend too much time on the intros. One thing I will say is we have the chat box as well as the Q&A box over here on the side of your screen. I encourage you to please use the Q&A box for any questions that you have. So you'll see that's the one with the question mark icon. We'll be going through a set of pre-prepared questions that I've set for the first 20 minutes or so of the session, and then opening up for Q&A at the end. I'm always super impressed anytime I hop on the CFO Connect webinars just with how strong the questions are, and oftentimes I think those are super interesting. So we'll leave plenty of time for that at the end. But with that, maybe we can open it up to some questions, and I'll kick it off first with one for Vulnavia. But I guess from a higher level, how has the permacrisis impacted leadership over the last 2 years? And how have you had to change your working styles?
Thanks, James. And thanks to CFO Connect for having me here. I think this was a hard one, right? So being in Africa, what you find is that we kind of think that we're in a permanent crisis and have been from the beginning. And so just trying to frame this and what the answer could be, it's a little bit difficult, but I'll give it my best. The biggest change and I suppose challenge that I've faced is that, leadership has moved more towards mentorship. Previously, you could get away with, have you, just KPIs, have you done it, has the work been delivered? But you need now to make sure that your people are okay and that they're comfortable. And because this is what is almost like the signals for productivity later. You need to put aside time to check in. You need to let people, people need to put their hair down. You need to become a therapist. And it's a therapist, not just for work purposes where you're coaching, but it's family, it's finances, it's relationships, it's religion, it's parenting. And so when you're having these check-ins and you're talking to people, not only within your team, but other teams, you're constantly within that trying to figure out, how is this going to impact productivity later? What does this actually mean? How do I get to know where this person's mindset is, not only now, but in the future before they do? And so the big shift, and you'll see, is that in the past 2 generations back, people would stay, right? Economies were stable, companies were stable, but everybody is trying to preempt each other. And so you have this preemptive, almost transactional mode of leadership that you can only go in with your heart, right? You realize that the people that you're dealing with, it's not just a set of numbers, it's the individual as a whole, and that individual is who's going to show up. And that's such a difficult thing, especially for finance people, because we're not taught this. Every exam, every situation that has led us here has had nothing to do with soft skills. Right. So, yeah.
Absolutely. Absolutely. And I think some of that stress and anxiety that you talked about is something that Dan has also kind of encountered as well and wanted to talk about on her team. Dan, how do you manage that when you have stress and anxiety caused by the perma crisis? What are some of kind of the tactical advices or tactical advice and kind of workflows that you've found have been the most successful?
Yeah, I think the deeper cause of stress and anxiety is often from the lack of trust, right? The lack of trust, usually I would say with the management team, because if you're not crisp of what kind of situation we're in and what do we plan to react to it, and you are leaving your people in the limbo and you're leaving people in the situation that Vulnavia was just describing, is there is already so much external stress on your employees that you should be a strong core to your people there. Really, the solution there is communication, right? So communication more often, much more often, and transparently, even though that you don't have all the answers, right? Most leaders that they only want to communicate when they have all the answers, right? Especially like for the finance professionals and for the CFOs, we were trained to say the things that we have 100% confidence, but it's not the case anymore, right? The answers is just the what, but the people want to understand your how and your why. So share your decision-making framework. For example, we openly share we don't want to predict the market, nor we can, because no one has a crystal ball. We educate our employees on our bear case, the bull scenarios, and here is what we plan to do to protect our business. So when we need to do the tough decisions, for example, cut the free lunch and cut the vendor spend, people are not panicking and speculating, hey, is the business not doing well? Why are we, cutting left and right? They would understand that we are trying to achieve cash flow positive in 2 quarters, right? So that's the big North Star. And we can position our business extremely well to increase our valuation if we achieve that. Right? So one thing I like to say is trust is earned in drops and lost in buckets. So be intentional and really manage that trust as your most important KPI. During this perma-crisis time as a leadership team, we constantly do this reflection internally. Have we done things that we said we were going to do? Did we share the reason for the tough choices? Something went wrong. Did we own up to it, right? So that really can build trust there. And the second thing is more what we can do is really help your team to broaden your perspective, right? So valuation volatility in this market is like weather, right? And the doable growth, the high quality growth is like training for marathon. So there will be a few days that's bad weather and you need to change your training plans, but you will never say, hey, I can't run a marathon because there are a few raining days. So I try to teach our employees how the market and valuation works to take away that unnecessary stress and anxiety. So for example, I usually tell them, hey, look at our peer groups, right? There will be a day they go up 10% and there will be a day that they go down 10%, but those days don't matter at all. Like we shouldn't pay any attention to that. I only pay attention to if we're in the line with our peer group on the critical metrics that matter, right? So for example, rule of 40, cash flow efficiency, durable growth rates, and you got valued on both growth and profitability over time. That's how we will be rewarded with a solid valuation. So I think ultimately with this two approach, you can help your employees really manage that stress.
I think that's exactly right. And I know across so many of the portfolio companies that I work with, there's this question of managing company morale while also, cutting back on some spending or maybe being a little bit more realistic on your growth targets and people realizing what impact that may or may not have on valuation. What's some examples of maybe the hardest changes that you've had to make over this perma crisis, Dan, as you think about, tough conversations you've had to have, or was there something you had to push for with the rest of your executive team where maybe you were the realist in the room, or maybe you were the most optimistic in the room and you had to change someone's mind? What's maybe a good example of that?
Yeah. So when I joined ClickUp, the startup company, that was the time when money was all free. So James, like you said, our go-to-market leaders, they're working like Formula One race car drivers. Just go, go, go. And it's been quite a journey to shift their mentality from a race car driver to a surgeon, right? So I can share a few of examples on, how much work we need to do to really kind of shift people from growing at all costs to optimization. So one example is we used to very heavily rely on media spend, right? Performance marketing to acquire customers in this very highly competitive market. However, when the market shifted, the conversion rate decreased and we see a large diminishing return on our ad spend. So that means that as a go-to-market leadership team, we need to quickly diversify our acquisition strategy and just build a more efficient channels. So finance, like our team worked with our marketing team to quickly reallocate our investment into the new top of funnel programs and measure the ROI religiously, including a SEO engine, a community, in expanding our affiliate programs, and ABM on target enterprise accounts. So that has led to over 50% decrease over our CAC payback. And some other examples is sales, right? So the change from abundance to a frugality means our sales team needs to squeeze more from each lead, right? Because there will be no more leads because the marketing spend is not going to increase anymore, right? So our ops team really partners with sales team to build a customer engagement process as well that combines our product signals, because we're product-led growth company, with the commercial signals, so the sales team can go broad and go higher up in the organization. So like with this, that leads to we almost triple our average deal size year over year with this more clinical approach there. So during the market downturn, it is the best time to polish the machine and act like a surgeon for your leadership team. Heal the parts that are leaking and bleeding there. It is a lot easier to scale a profitable business versus the other way around. So yes, those conversations are very difficult, but once you get the leadership over that hump and roll them into the same direction, you can achieve the business outcome and the financial performance that you were designing for your business.
Got it. I like that surgeon analogy. I think I'm going to definitely take that away from our session today. But you also mentioned the data and some of the go-to-market funnel. I know, Amel, Uber obviously has a wealth of data that you can tap into for a bunch of different use cases. And frankly, I find the question of how and when to marry data with the financial function at companies one of the most fascinating and potentially needle-moving things that the finance team can work on. What have been some of the changes that you've seen in data usage at Uber over the years of maybe the last 2 or 3 years?
Yeah. So yeah, I joined actually Uber 2 years ago, and I've witnessed the change from a culture of hyper growth, surviving the COVID crisis, and then getting out of the COVID. It was all about profitability. So we have to turn the business profitable, and we did, right? Last quarter, the business turned profit, and there was a huge cultural shift because the data was always there. It was always available from day one. But how finance was using it was different. So I think it was really a step process. I think the first part was move the operational data that is available into a finance world, and making sure we understand each other. We're talking the same thing. We have the same understanding of the numbers we're looking at. And then when you have at least that data that is now available, you apply analytics to it. So we use advanced analytics. In some cases, we do a bit of machine learning as well. And in some cases, it's only still Excel on pivot table to apply it on some data dump. And when you apply the analytics on it, it's really about defining what is your KPI. And we have a target, we want to grow, we have a North Star, this is what we want to get to. And to get there, we have a set of KPIs that are aligned with the data, and the data is available on a daily basis. And then we build the entire processes that we have internally around that. So every Monday morning, we look at our numbers and see how we're tracking versus our forecast or our plan. And then we make course correction action. Within weekly basis, we look at the numbers, we see where we're tracking, where we have problems, where we're struggling, where we maybe need to invest more, or maybe we need to divest in some of the things that are not working. So it's really, we coupled the data into what we want to achieve, and we monitor it religiously every single week to make sure that we're tracking, we're reallocating capital when it's needed, we manage our portfolio. Where a product is really taking off, we might reshift some of the investments and the money that we have in that bucket until it takes off, and then we redirect and invest somewhere else. So yeah, we literally we run, we use again all the data that is available, that is again super insightful if it's looked with the right angle.
And Emma, actually, that's very interesting. I want to ask you, do you, as a finance leader, do you monitor any external data with your team to really assess what's going on externally versus internally? And how would that impact your decision?
Yeah, definitely. So we have financial metrics, obviously, but then we have operational metrics that are our external active drivers, like how it's the engagement. We look at our competition, and we look at as well, and especially in finance, I cover markets that are quite volatile. So if you think about Nigeria or Pakistan or Egypt and Lebanon, these markets are highly inflated. There's a huge devaluation happening in the last year. So we need to make sure that we are aware of what's going on. So we look at the currencies, for example, on a very regular basis to make sure that we adapt, and whatever we need to be leaner when we have devaluation and we're losing top line, because just the currency doesn't value much anymore. So how do we shift very quickly to be as lean as possible in those markets if we want to stay, or even rethink about a product that is low cost? And a lot of the challenges I've seen in the Middle East, at least in the Middle East and African market, is that the Uber product needs to be adapted into those markets. Like Latin America is the same, where you have the right product fit into the market. And you can only see that by looking at your external data and what the macro looks like, to make sure that you're adapting. And Uber again is a consumer as well product. So we'll have to know how's the weather forecast next week. Is there a Beyonce concert happening next week that might have an impact on our volume? So yes, we use a lot of external data.
That's fantastic. And Dan, thanks for taking over there for a second while my internet cut out. We're in a new office, so I got to find the best spots for Wi-Fi apparently. But no, I think that's super interesting, Amel. And maybe if we had to dig in on one specific, I love the weekly dashboard and checking in on the metrics. Maybe in the last quarter or so, can you think of a specific example where something was trending in the wrong direction, and what was the action you had to take to kind of course correct there?
Yeah, I think we have a lot into, if I take again some example on our market where we have aggressive competition coming in and capturing some of our active driver base. So we've seen again, so we have a lot of our competitors that are private funded. So whenever they get an amount of funding that they receive, they go quite aggressive for a hyper growth on those markets. So they spend a lot of money. So that's one of the things that happens all of a sudden, where they were on a low spend, or we were matching and we were balancing at some point, and then they become super aggressive. And we've seen it. So you see it right away. You see your active driver churning. You see your retention going down, riders as well, you're leaving your platform. So you have to make sure that it's very quickly as well to adapt, and then put the defense plan very quickly within a week to counter react. Either it's a pricing change, either it's a service fee change, is a campaign that we need to run. Do have to work with fleet partner to onboard and secure a bit of our fleet base. So yeah, these are the things that I see pretty much almost every other week, that we try to react as quickly as possible. And then we do a lot of A/B testing. So we run campaign for a week in different geography with controlled group. We test what works very quickly, and then before we deploy something much bigger and much more structural. So yeah, this is one of the things that kind of we test a lot around, to make sure that, again, whatever we're spending, what is the level of efficiency and what is the best, like where do we put our money, which best place we should put our money on.
Absolutely. I think what's so impressive to me in hearing some of that is just the ability to move so quickly, despite the fact that you're coordinating across so many different variables and really working with so many different inputs. So I think that's very impressive.
And I think honestly is really the finance was driving that, like the finance function, and it's really at the core of setting up the processes, giving the visibility, creating the rigor, and then putting as well all the investment kind of at the same level. So we look in all the initiative apple to apple to make sure, okay, we're deciding where do we want to spend, what is the best ROI, where I can leverage more, and finance is really a pivotal role on those type of discussions.
Yeah, very, very impressive. And I think one thing that's interesting there is you have to have confidence in the metrics to be able to make those quick decisions. Throughout your time at Uber, have you ever had other stakeholders in the business question the validity of metrics, question maybe some of the dashboards that you spoke on, and how do you kind of build that confidence across the business in the metrics that you're putting together?
Yeah, definitely. Especially when you're building, again, as Uber really went through that, like maturing and building those processes in place. And then you have as well people from, like, it's a cultural shift as well in education. So you have to explain why forecasting is important for the stock market and why is it important for them and why we're doing it. So there's a lot of education that you need to do first to explain to your stakeholders, like why we're coming with rigors, why are we adding friction to the process, and what's the benefit of it. So there's a lot of barrier that comes when you start doing that. So there's a lot of education that you need to do. And then it's really proving by time as well. Like they might not be convinced on the first place, but after a while, understanding the process, they see really the benefit. And then at some point, I think at the beginning, you have to force it. You have to force it and learn as well from them. So we co-create on many instances. Like if you think about the forecast, when I build my forecast, I build it with my operational team from different angles, from marketplace to my rider leads and my driver leads, and like really, and then the country managers as well. So just to get an exhaustive view and to make sure, okay, we are aligned and we see the risk and we at least understand what's behind to make sure we move forward. So the moment you include them and they're part of the exercise, it makes the things much, much easier. And then the moment as well they understand why you're doing it, you just open up a lot of possibilities. And then sometimes even come back and say, well, I might not need to spend. Actually, I can give that money back. And then when you get there, you're like, okay, it's a win. It's a huge win.
Amazing. No, it sounds like a big win for sure. I want to turn back to Vulnavia and get a little more information about the Permacrisis and how that impacted the Student Hub. So maybe both what's been the largest impacts over the last couple of years, but then also how have you successfully navigated it and kind of traversed that growth versus profitability mindset over the last couple of years?
Yeah, so the Student Hub is an educational technology company, right? So when COVID hit, that was a boom. You know, we had one of South Africa's biggest investors come calling, and fundraising was really quite easy. What that meant, I think, is it ties into what Dan said about, you know, when you have prosperity, you kind of let a couple of things leak through your bucket. You know, quite you build in a lot of inefficiencies into your system, and you have to, when something as big as a shriveling in terms of the market, in terms of what we need, when that happens, it hits you really hard because the company does not have the muscle for it. And so the job of finance, it changes, right? Where before it was nice and tidy and historical, it becomes more involved. So what Amel says for us is a big challenge, because the biggest issue we have is the company is young. We don't have data. We need to get data from from the market. But Africa has a very immature data market. And if you were to take, you would use proxies, right? The proxies available are European proxies, American proxies. Well, you then have to have, you have to index them for where you are. And so the data would say, well, it looks as if you are 10, 15 years behind Europe. But at that time, Europe wasn't going through what is happening right now, right? So there was no Europe, geopolitical issues. There's no COVID, there's no Ukraine war. And so what you find is you start to build models and you build data on assumptions. And that's really not ideal, because when you have an assumptions-driven model, it's very unreliable. And so changing people's mindsets within the Student Hub and also within companies I've worked with in the past, trying to get them to understand that now finance needs to be more involved. The information that we used to just give needs way more validation, needs to be, is it actually true? Will it actually happen? And perhaps let's shorten it. So I'll be back in 2 weeks' time. I'll be back in a week. It's no longer good enough to just forecast 6, 12, 18 months out. And so the mindset has been understanding that we need to collaborate a little bit more. Silos as they were, they don't work because we don't have plenty. We have a lot of constraints. Right. And so those constraints, if you are trying to forecast for education in South Africa, it's well and good, you can size your market, but how on earth are you going to make it in Kenya? And when you show up in the DRC, how on earth are you going to do that? Because they have different fundamentals and you can't see, there's no data. So you send people. And so what we've learned is that you trust everybody. I think it's that old maxim, and you validate everything again and again and again. And so I think that the biggest challenge, I saw it in the past 2 weeks, is that when speaking to leadership and just saying, we need to make sure that this data is correct, because a rounding difference, 0.5, to me means that we go bust in November. To somebody else, to other departments, understanding that that level of quality is required. It's a big sell. So you spend, now not only are you coaching your own teams in terms of understanding the importance of quality, but you're also changing the way the business functions, right? In terms of looking at a constraint-based business where validation is really key. And in a startup where speed is everything, you can see how, you create friction. Right.
Absolutely. And I think one very interesting trend you hit on there is on collaboration and the need to foster that collaboration, both within the finance team, but also within the other, functions in an organization. How have you specifically as a leader focused on building that trust in people, creating a more collaborative environment, especially as we've gone more remote? It sounds like a lot of folks on your team are traveling. How do you kind of foster that community within the organization?
I think you open with, we're friends, I do not come to you by chance. I think that, it's those soft skills for finance people that I spoke about, where, you have gotten to this point as a finance executive, individual, manager, and no one has really taught you the softer side of negotiating, of making sure that you bring people along, of teaching, right? And so the role moves a lot from telling, which is what any financial manager does, right? You report on the past and you tell them, this is what happens. But now it's trying to create a picture and being there with them, creating a picture for the future and saying, and this is what it means. And so that involves, I found, a lot of coaching, just to have people moving away from, well, the operational element of it is valid, but it sits under, every decision we make has a financial consequence. And so this is how I see the consequences. And so let's build that gap together. And so it's, you have to make friends. So you have to create allies. You have to make sure your information is a lot more visible, a lot more transparent. I think culturally what we had at the Student Hub was that because a lot of information at the beginning was centralized within finance. And so people would use that to justify not moving and not doing when permacrisis hit. So it's like, no, go and ask finance. And it's like, no, let's work together. And this is how we're going to start dashboarding. This is what you're going to need to use to make the same decisions that finance makes. And these decisions are good enough. They're level 1. We can work them back. They're not, it's for a week, it's for 2 weeks, etc. But it's really creating the right allies. It's making sure that you're transparent with your data and you bring them along. You're transparent with, how did I come up with this decision and how does it affect? And you show, I think the biggest challenge you'll face is actually validating your position and saying, and therefore, this is why you must listen to this conclusion. And that puts pressure of excellence on you as well. You can't just get away with saying finance said.
No, I think that's great. And kind of drawing across, what we've all talked about today, I think there's a sense of bringing finance more into the operating cadences of businesses, whether that's on the go-to-market side, whether that's matching supply and demand for drivers, whether that's building trust across geos and siloed data, at the student hub. I mean, I think that is, as an ex-finance operator, that's something that gets me excited. I'm happy that that's come out of the permacrisis, if nothing else. But I think it's true across a bunch of different businesses, and it is an opportunity for finance leaders to step into that role and say, hey, we're here to help and support you and make data-driven decisions, and we can help you make operational decisions. We're not just here to report back on did we make or miss the last quarter. And I'm sure everyone on this call agrees with that. But with that, I think we've hit all of our key points here. And I kind of want to open it up to Q&A. I noticed we've gotten quite a number of good questions here in the feedback box. But I'd maybe just start by going around the room with all three of our speakers and asking, what's the best leadership advice you've received, with a special kind of twist on it? How is that related to, performing during crises and building trust in organizations? But maybe Dan, starting with you, what's the best advice you've received?
It's the key word of today. It's a resilience. A mentor told me, when you feel hard, don't opt out, opt in. Take it one thing at a time. When you take a new job, super overwhelmed, especially if as a finance leader joining during the market crisis, just build up the muscle and get those things done. When you get stuff down and build up the confidence, it became easier every time. Right? I think there's a quote from Jeannie Rometty, the CEO of IBM. She said, "Growth and comfort do not coexist." So when you really push yourself outside of a comfort zone, that is when growth happens. You don't feel it. You just feel hard at the time. When you come out of that, you're just so much stronger. And I think that we need to feel a bit overwhelmed. Otherwise, the job is not growing us. One thing I always tell my leaders is, trust that the day-to-day challenge will someday be forgotten and replaced by the memories of the year-to-year progress. So I really think that is the guiding star of my career, during the peacetime, during the wartime, because you're focusing on the personal growth. Nothing feels too hard. It's the resilience.
I love it. I love the resilience during the crisis. Amel, how about you? What's the best advice?
Yeah, I think it's just, I always stick to my mind on my first manager. So quite young, I joined General Electric, and I was working for a business that was selling gas turbine, and I had no idea what gas turbine was. And I would go and seek some support from my manager, who became later my mentor, asking for financials, acumen and learning on financials. But he would make me sit and took a piece of a blanket paper and a pen, and he would draw how a gas turbine works and what was like everything that goes around it. And then what he taught me, and it's really something that I kept with me, is if you want to be a good finance partner, you have to know your business in and out. You have first to understand how your business works. What's the dynamic? What is important? What's the area of risk? How your customer react, to make sure that you're making the right decision and you're able as well to challenge your business partners. So I think, understanding the business and becoming an expert is usually that's what I would focus always when I take a new role, is really first understanding the business and then apply finance to it.
I think that is very good advice, and all of the best finance operators that I know and have spent time with know their business back and front. The funnel from, where does the top of funnel all the way down to how do we recognize revenue,
Yeah.
tends to be something everyone can answer if they're on top of their stuff. So I completely agree. Vulnavia, how about you? Best advice.
I have a terrible memory, so I probably got it and promptly incorporated it. But something does stick out to me. I happened upon an accidental mentorship last year, and I would get on the call, and the man would get on the call, and we just start talking. And I'd ask him questions, and he was pretty open to whatever I asked him. And one of the things he said to me, I was struggling with managing a team member, and just how can I be there for them? And he said, you know what, that person is going to be successful in spite of you. So you need to ease the pressure a little bit in terms of how you handle them and how you manage them, because if they are as good as you say they are, and I'm hoping that for each finance person, when you have the privilege to hire people, you try and make sure you get the best. And so if you do take the time to really look for a person that is well suited for the role, they'll be successful in spite of you. So micromanaging, getting in their way, don't try and get in their way. In fact, try and help them get there faster. So that's like the most, I think, the most profound leadership advice I've ever received, that your role is actually to help them get there faster, because they're going to get there. And like it speaks to what I said in the beginning, where you have to understand the whole person. You need to understand what drives them. You need to understand, what brings them down, what could trip them up, and then help them with that. Help them understand how to navigate it. And if it's not you, help them with the tools that they might need, or perhaps with other people that might be able to help them. And so what that did was just a pure unlock in terms of how I view people, whether it's my direct reports or people that that I'm interacting with at a peer-to-peer level, or teams from across the board. They're going to get there. My job is to ask myself how I can turbocharge that and help them get there faster.
I totally agree. And I think that actually mirrors one of the questions that we have that's the highest upvoted so far, around maybe you're a new joiner to an organization, or you're looking to kind of cement trust within your finance team. Maybe you're a younger team member on the finance team. What can those members of the team do to really supplant trust in the organization and kind of build up that reputation over time? What are maybe the first thing you would do if you were starting a new role? What would be your key focus? I'll let Vulnavia, I'll let you. You already had a great response, so I'll let you go on this one as well.
Needed time to think. It's a good question. It's a difficult question. I think so. First of all, it's not prescriptive. It will depend on the nature of the company. But what Amel said is probably by far the most important thing, which is you need to get to know that company. You need to spend time with the different members of the company to understand how they view things, so that you can ensure that you have at least a perspective that is not just your own. So depending on what level you start at, first start with peers across different teams, then go further up and just spend time trying to understand, what on earth do you do here? It seems like such a facetious, question, but what on earth do you do here, and what keeps you up at night? What on earth are you trying to solve? Because remember, finance it's almost the accountability hub. So if you spend time canvassing that information and you get to understand what people are trying to solve, you either quickly see that the company needs some kind of correction because there's a deviation, or you quickly see where it is that, that you quickly get your validation that people are spending time in the right places. And so when you start doing things like allocation, when you're having your budget conversations, when you're having your cost analysis conversations, when you're trying to establish what markets to go to, you kind of have the building blocks of how people are actually thinking about it, and you understand the gaps where there's no pressure. The hardest thing is to build trust when you need something, right? So when now it's budget time, it's crunch time, and you show your face and you're trying to also within there show that, I'm really good at my job and I understand all of these things. That is, you can pull it off, but you'd rather do it in a more coffee type of environment where it's, I'm new here. What on earth do you do here?
Got it. I think that makes a lot of sense. Another highly ranked question here is, what are the indicators that you may be heading into a crisis? I think that's a pretty tough one to answer. So I'm gonna flip the script a little bit and say, what is maybe something that you either personally as a leader or as a business were doing pre-crisis that in a post-crisis time you realize was maybe not the right decision, and how do you think about what you'll take forward from the most recent crises in terms of long-term operating the business? Dan, maybe I'll open that one up to you, and then I know we talked a lot about the go-to-market side, so maybe something within the go-to-market, I'm sure.
The things that pre-crisis that companies were doing or the decisions we're making, I think one, I'll share a personal experience is you will be surprised that how fast the startup can get complex in every unnecessary way. So I think that unnecessary complication is definitely that happen when you can do everything. You don't need to prioritize and you have infinite resource to chase the next shiny things, right? And this crisis time really put a requirement on leadership that your number one job is to simplify for your team, because all these noises created by the hype of the market, right? All this free dry powder money from the VCs. And how do you help the team to shut down the noise, prioritize, focus, define success clearly for them, and deliver? So one question I like to ask the new leaders on their first 90 days is, what have you simplified for your team, right? If you look across the organization, the way we communicate, we prioritize, we make decisions, complexity leads to bloat that leads to inefficiency, right? I think simplifying is the biggest value that the leader can bring to the organization. And that is a clear difference before and after the crisis. And you can see, that is a major line here. And then the second thing I would say before the crisis, that people saying that they're doing the forecast and they're just actually throwing numbers in the spreadsheet, right? I think that ability to really predict after the crisis, that people realize that that's a true skill set. And the challenging macro environment sometimes leads to a very short-term thinking. I think as a leaders that we are expected to climb the tree a lot more often now. So when we make a decision, the team will be looking at the leaders, looking at the finance leaders to predict the second degree and third degree of the outcome, more than just the linear outcome, more than just like, this is your inputs, put your number of sales reps in, and this is how much booking you're going to get out from the other end, right? It's a lot more multidimensional than that. So usually your team, if your team were operating at 1,000 feet, but as a leaders, we should be operating at 10,000 feet and really see more broader risk and broader opportunities as well. So that short-term thinking and long-term thinking, another key differentiator there.
Absolutely. Amel, this next one's for you, and I think in a very data-driven business, this is a very relevant question about how do you measure and how do you think about the size of a risk that you're taking? When you make a decision, it's impacting the operations of the business. How do you think about, is this too much? Is this too little? Obviously, some of that's data-driven, but maybe do you have any frameworks you could share about how you think about impacting the business and how much risk you're willing to take in moving something?
Yeah. So I think back to it was very close, I guess, to the previous question as well. I think one of the things that we've seen post-crisis is we know what we're certain is uncertainty. So again, whatever we're going to forecast, we know within 2 weeks is gone. And we try to do to our best of our knowledge what we think the market should be. So I think a lot of the things are really around scenario planning. So when we forecast, we do multiple scenarios so that we're able to very quickly pivot when we need to. And if the scenario A didn't happen, maybe scenario B, but we're already prepared and we already thought about what are the things that we need to do to get there. So it's and then be able to be super agile as well, very quick to be able to reshift and repivot along the way. So I think that's one of the things that we've seen a lot during the pandemic. And then this is kind of the things that we've seen trending even more right now that we're using. And we do, as I said a bit earlier, is the test. You don't have to go with a full investment. Doesn't have to be a 3-4 million investment, but you can test it. Again, data is like whenever it's available, you can test. There are tons of methods available that we can quickly test and what is the best outcome possible with different scenarios and make a decision, at least based on the maximum knowledge that we have. And at least we have a bit of a sample that we tested with. So I think, yeah, that's the two kind of things that it's kind of in my toolkit that I usually use to make decisions, because the risks are always there. And then we try as well to identify as well opportunities to offset a bit of that risk. So we have to make some bold move, and then we have to move in order to grow, because at some point, like, you have to do it. You have to take the bet. But there is a lot again, and if you have the chance to have a portfolio mix in your product or your geography, then you can really test on one market, but you're making sure that the market that is kind of your secure and safe, or like financial stream that you can get a steady stream from, and then use that to really go and test and manage the portfolio where it's needed.
Absolutely. Well, I think that is a really thoughtful discussion from everyone on the call, and thank you to everyone joining. We unfortunately are at time. I think we got through most of the Q&A, but I do encourage you all to connect with myself as well as our panelists on LinkedIn. Feel free to follow up with us. We are more than happy to stay in touch and be a part of this community. So really appreciate the platform of CFO Connect for hosting us all today and bringing this great group together. I really get a lot of value out of this community and think we have some of the best finance operators in the world on these calls. So very excited to wrap up this, but I will say there is another call happening in just 10 minutes. That's focused on FP&A, which is one I'll probably tune into because I'm quite passionate about FP&A, have made investments in the space, have spent a lot of my life in Excel, as I'm sure many others have on this call. So I'm sure that one will be a lot of fun, and I encourage people to stay on for that. But with that, I'll close us out, and thanks so much, everyone.
Thank you for having us.